Meantime, my next guest has a new note out in which she tries to quantify the spending cuts and possible targets of the newly formed Department of Government Efficiency, headed by Musk and Ramaswamy. For more, I'm joined by Sarah Bianchi. She's Chief Strategist of International Political Affairs and Public Policy at Evercore. Sarah, a fun one to put together. By the way, I noted, as our colleague Brian Sullivan points out, the defense, I don't know if you call them contractors, the Booz Allens and the likes, really trading down sharply in anticipation of what could happen here.
Yeah, well, there's a lot at risk when you announce a commission like that. But it is important for people to keep in mind that a lot of the federal government spending is Social Security and Medicare. That's really most of it, honestly. And then there is defense spending, which can be politically difficult. It's a big part of the budget, but lots of Republicans in particular like to increase it. And then there's the other part that we call non-discretionary, non-defense discretionary, education and the like. I think people, while Elon Musk is a great innovator and has certainly made a lot of contributions, he might find some of these programs are pretty hard to get rid of. First of all, most of this is within the purview of Congress. This is not something you can just wake up one morning in the executive branch and get rid of. And so there are going to be limitations there. And again, it's very, very difficult. Most of these programs are there because they have a champion. And so we think getting the scope of what Musk is talking about, $2 trillion, is very, very ambitious.
I mean, let's start from the premise that it's unlikely that we hit that number. But what is likely to you? Where exactly could we see meaningful, and maybe not even meaningful, but where could we see cuts, period?
So we think one of the places that Republicans are going to go quickly is the Medicaid program. That is a little bit easier legislatively, politically in their minds. We think the Affordable Care Act could be letting some of those subsidies expire at the end of next year. Again, this non-defense discretionary, that tends to be things like education, some kind of a potpourri of low-income program. So those are places where you could look. And again, I can see, potentially knocking off, $2 trillion over 10 years, but certainly not $2 trillion per year.
So there are actually a number of public companies that have Medicaid exposure. So that'll be something for those investors to think about. Where else, Sarah?
Well, you all were mentioning the EV tax credit, and I do think that is on the list. I guess that's not spending per se, but there are folks who believe that is not a necessary credit. And I also thought it was interesting that the commission talked some about regulation yesterday. So it doesn't seem that they are really just going for budget cuts. They're also going to look at places where Washington is over regulatory, that you have a lot more authority to deal with the executive branch. It may not get you those dollar numbers that you're looking for, but certainly it can provide a lot of relief.
That would be kind of in the environmental, energy, education, and those kinds of areas?
Exactly, financials. But certainly, I think a lot of times when they talk about the EV mandate, they're not necessarily just talking about the tax credits. They're also talking a lot about the environmental regulations that the Biden administration has in place to help drive this transition. Those we expect him to propose day one to move against. Again, it takes time to re-regulate in that space, but very, very much on the target.
Well, we appreciate the granularity. And as we get more detail, we'd love to have you back, talk more about it.